Thank you for joining us this Friday, the 26th of November. I'm Sophia, a market analyst with Bell Direct. This is the weekly market update. We'll cover the market's performance this week so far, the most recent broker views and predictions on commodities, economic data, and why iron ore miners won this week whilst gold miners lost. To start, let's take a look at what happened this week so far. The market has had a positive run. Monday to Thursday, the ASX 200 advanced 0.15%. The materials sector has gained the most, up 3.5%, while utilities have also made strong gains, rising 2.9% higher. 4 of the 11 sectors are lower, with information technology declining the most. The financials, communication services, and the consumer discretionary sector are also in the red. In terms of the best and worst performing stocks this week, EML Payments topped the chart, making an impressive gain of 23.6% week to date and rising 31% on Thursday. The company has had a few months of uncertainty, with the Central Bank of Ireland investigating regulatory concerns and the company's growth plan. Additionally, earlier this year in May, Ireland's Central Bank were also looking into EML's anti-money laundering processes. However, EML this week informed investors that the bank will allow them to sign new customers and launch new programs with broad-based restrictions to limit controls. The resolution of this regulatory overhang saw EML's share price jump this week. The rest of the best performers were the major mining stocks, which took centre stage this week, leading the ASX 200 with strong gains. Nickel Mines, NIC, gained 19% off the back of partnership news. So its price has been increasing since Monday, when the company signed a memorandum of understanding with Shanghai Descent Investment Group. The partnership provides the company with opportunities for future collaborations, and the multifaceted agreement will also see NIC acquire 70% of Shanghai Descent's Oracle Nickel project. Fortescue Metals, FMG, also climbed higher this week, boosted by an increase in iron ore prices. There's now been improving margins for Chinese steel mills, and authorities are also pushing lending along, which has assisted iron ore this week. FMG remains a bell potter buy, while Goldman Sachs have a sell rating with an $11 target. Also boosted by iron ore this week were Champion Iron, CIA, BHP, and Rio Tinto, RIO. Meanwhile, lithium miners Orocobre, ORE, and Pilbara Minerals, PLS, also made the top 10. Pilbara rose higher after announcing an agreement with existing lenders to increase its senior debts, with its total secured debt facility limit increasing $30 million. Now, in terms of the stocks in the red, auto parts retailer Bapcor, BAP, tumbled after the surprising announcement that Daryl Autonomy, the company's founder, CEO, and MD, is retiring. TechnologyOne, TNE, has also been declining, as investors have been selling the stock since the release of its full-year results. However, the company's results were overall positive. Following the results, Morgans retained their ad rating, while Macquarie and UBS downgraded their ratings to underperform and sell. And with the price of gold under a bit of pressure this week, the major gold mining stocks all declined. Gold miners made up most of the worst performers on the ASX 200 this week, including St. Barbara, which dropped the most, Gold Road Resources, Silver Lake, Regis Resources, Ramelius Resources, and Evolution Mining. So it was the materials and commodity prices driving the most movement in the market this week. Now, with this in mind, let's take a look at the current broker recommendations on commodities. Let's consider iron ore, copper, and met coal. Spot iron ore increased as China's steel mills are expected to increase production, with companies now completing crude steel output reduction targets. And coal is rising this week as China's daily coal output has stabilized and demand from Europe increases. Taking this into consideration, Morningstar have lowered their 2021 to 2024 assumptions for iron ore prices from $133 to $116 a ton. And for the diversified major stocks, they view BHP as the cheapest. However, there is that risk that if the downturn continues in China's economic activity, that is considered a risk factor. As China's demand is getting worse by the month, Credit Suisse has noted that Australia's iron ore exports rose marginally year on year. Now, if you prefer less exposure to the fluctuations of iron ore, Morningstar are optimistic on Deterra Royalties, DRR. Deterra's earnings are heavily supported by its royalty over some of BHP's expanding mining areas. However, the broker considers DRR as expensive. On the other hand, stronger near-term copper prices provide less of an impact for stocks like BHP and Rio Tinto. Morningstar's 2021 to 24 assumptions on average copper prices have increased to $4.44 a pound and $205 a tonne for met coal. Credit Suisse also estimate an additional demand impact from the $1 trillion US infrastructure bill. Now let's take a look at the volatility we've seen in thermal coal over the past month. Now this week, the spot Newcastle price fell to $150 a tonne after it had jumped to $254 in mid-October. So this was driven by China's thermal coal prices. So China doesn't purchase Aussie coal. However, Credit Suisse say it's still influenced by China's movements. China's thermal coal prices have almost halved since mid-October, with increasing government intervention, including several price ceilings for thermal coal. Macquarie lowered their forecast on China's domestic thermal coal price from $123 a tonne to $115 a tonne for 2022. So these are the latest expert views on commodities for your consideration now that China's big commodity inflation boom that had hit a 26-year high has now started to retreat. Now, taking a look at the most traded stocks this week by Bell Direct clients. These included mining stocks, Champion Iron and Fortescue Metals, as well as the financials with NAB, Westpac and CBA all highly traded. Sonic Healthcare, SHL, was another highly traded stock following broker updates after a positive sales update. Morgans retained their ad rating and Credit Suisse retained their outperform rating on SHL. Clients were also buying into Beach Energy, BPT and APA Group, while took profits from AVZ Minerals. Now, as for the economic data to look out for in the week ahead, building permits and private sector credit will be released on Thursday. Manufacturing PMI and inflation data will be released on Wednesday. Balance of trade data and retail sales data will be out on Thursday, and services PMI will be out on Friday. So a lot of economic data to digest in the week ahead. And that's all for this week. Have a great Friday and a great weekend. I'm Sophia Mavridis with Bell Direct. I'll see you next week.